Hi, it's Tom Jacobs, and today we're talking about financing. Today I want to talk to you about financing your business because there's a lot of confusion around what is good financing, what kind of financing should I get, what affects my credit score, all of this stuff. And I've been getting a lot of questions recently from my private consulting clients about how can I get financing? And I wanted to talk to you as a general population on how you can finance your business. So I've been working with several different financing companies over the last 7 years of being in business. And I've created this relationship with them, so they love to give me some information, and they've asked me to share it with you as well. So a couple things to think about when you're looking for financing. The first thing that people look at is your credit score, both as an individual, but also as your business. Businesses have credit scores as well. And so you need to make sure that that credit score is high. You know, you can usually get by with somewhere in the mid 600s, all the way up to, of course, 800s. Over 800, 850 is superb credit and something that everybody should shoot for. A lot of business owners, though, struggle with separating their business credit from their personal credit. And so that's another thing that you need to look at, is making sure that any loans that you get for your business are in the business's name, therefore building your business credit, but also not impacting your personal credit. This is something that I struggled with for the first, probably 5 years of being in business, is that a lot of the debt that I had in the business was related to me personally. So when I went to buy a house or a car or my motorcycle, things like that, they were looking at that and going, well, this is odd. Look at all this additional debt. And I had to explain and document and show that that debt was actually on the business books. Now, any debt that I have in the business is all tied to the business. And so when I look for a new home or investment property or anything that I'm doing now, I can actually get that loan without my credit score being impacted because of all this additional debt that isn't related to my personal income, if that makes sense. All right, the other thing to think about is leasing. If you're going out to get a bunch of equipment, leasing oftentimes is a much better alternative because you can get a lower rate and have extremely flexible terms. One leasing company that I work with, Joe at Fit Leasing, he's a great guy to work with, but he put together a program where 3 months of the year you might not be very busy and income would be lower. So 9 months of the year you're paying on your leasing equipment and 3 months off. How great is that for cash flow? So leasing can be very, very flexible in terms of how you structure the payments, and also keeps your cash flow very, very, very steady throughout the year, if that is what you're looking for. You can also do residual type of leasing where you're basically renting the equipment from the leasing company or the financing company, and at the end of that term you can turn it back to them and get brand new equipment, or you can buy it back from them for a predetermined amount. A lot of times what I did with my equipment, I bought it back for $1. So basically it was a lease to own type of arrangement, but I had set terms throughout the years. 3 years was typically what I would do for a leasing term, and I knew exactly how much I was paying each month, and at the end of that term the equipment was mine and it's free and clear. It also stays off your books in terms of debt as well most of the time. So those are some things to think about financing. So number one, make sure that you are getting your credit score looked at on a regular basis. I actually heard this pretty staggering statistic that 50% of credit reports that are out there are actually incorrect. So make sure you look at your credit score and that you don't have any bad marks on there, because that will impact how much you can get in financing, and more importantly, the terms that you're getting with the financing. All right, so look at your credit score, and then also look at leasing as an option. You can oftentimes get 24-hour turnaround. So when you're looking for new equipment and you want it very quick, you can get that turnaround immediately. Whereas with a traditional bank loan, it's going to take a couple weeks to put all the paperwork together and then meet with the bankers and all that stuff. A lot of times it's just a credit report, especially if you're getting a low amount, under $75,000. in equipment, you can oftentimes just do that on a credit application. So those are some options for you in terms of financing. I'd love to talk to you more about what you can do in your business and how I can help you out. I hope these videos are helpful for you. I'd love to learn more about you and your business. So go to my website, TomJackobs.com. TomJackobs.com, somewhere down here on the bottom, and request some of the free information. If it makes sense, let's have a chat. So just request a strategy call, and then we can chat about your goals in your business and how perhaps I can help you out. So until next time, it's Tom Jacobs with TomJackobs.com.